Welcome back. You're still watching Markets at Noon, and right now with us is none other than Abhay Agarwal, founder and fund manager, Piper Serica. Abhay, good afternoon. Thank you so much for giving your time to ET now. Mansi, the way this side. Abhay, as we speak, there are so many developments happening, and all such developments, at least positive for the domestic Indian markets, as I see. Even when there are tariff jitters, we still have our positive triggers, and two major developments is the U-turn which Donald Trump did took and the statement which came from him for India. And another one is our exclusive chat with FM Nirmala Sitharaman. And I would like to take a line from that chat where she says India will navigate its trade policies with the US carefully. And while we want to be friends with everyone, the priority will remain India. How do you see all of these developments, Abhay?
No, thank you, Mansi, first of all, for having me on the show. Good afternoon to you and everyone. Uh, I think you broke it up beautifully into two parts. The first part is something that we do not control, which is the constant flip-flop U-turn by the US president on the tariff issues, the threats, and then, trackbacks and again, tariff implementation. Now, I think India has realized that there is little that it can do to control the tariff narrative that has been created by the US president. So, what we need to do, and I think that dovetails into the second part, what you said about the finance minister and also the prime minister's statements, is to focus very clearly on what is in our control, which is to push the reform agenda by focusing on manufacturing in India as much as possible so that we are not dependent on imports. In fact, we develop India as a hub for manufactured exports to rest of the world. So that is, I think, clearly a priority that the government is working towards. And the second also is to boost consumption to make sure that the Indian consumer has enough firepower to consume whatever it needs to. And it has been done through an income tax rate cut and then an interest rate cut and now in a GST rate cut. So I think all in all, I can say that we are using this very well as an opportunity, the entire tariff threat as an opportunity to become more self-dependent, and not only self-dependent, but also competitive at a global level, that we can have our products being exported to large countries, not only just US.
Right, Abhay, and Prime Minister says it, Aapda mein Avsar, as you mentioned it just now. But which are the opportunities you see sector-wise for investors, which one can look for at least 1 to 2 years horizon?
Yeah, Ankur, I think one clear opportunity that we have been witnessing for last 5 years, and that is getting bigger and bigger, and I think has a long way to go as far as growth is concerned, is the entire electronic manufacturing ecosystem, the companies that are leading in that space. And we were fortunate that we added these companies in our model portfolio at a very early stage. And these are not buy recommendations, but our model portfolio has companies like Sirma, Keynes, Amber, Dixon. And I think not only these, but there will be other companies like this that will come up and take leadership in manufacturing of simple and complex electronics, semiconductors, defense equipment, even automobiles, like how Xiaomi has moved from an EMS player to manufacturing EVs that have been already launched in Hong Kong. So I think there is a lot of runway left for electronic EMS companies in India, and government is very supportive of that, not only from the perspective of replacing imports, but also developing these companies as export companies. So I think this is one space we are very positive about. The second is, again, innovation-led CDMO. So we are seeing young pharma companies accessing that space right now by utilizing their capacity, but also going beyond that and becoming development partners with the global research companies. So I think these are the two spaces we are very excited about. The third space is the consumer internet space, where we are seeing companies finally hit their mark in terms of making sure that they are unit economic level positive. So I think these are the three spaces that I think we are seeing as a fund house that present real opportunity for not only 1 to 2 years, Ankur, but I think well beyond that also.
Absolutely. Three spaces: CDMO, consumer technology, and EMS. And I completely agree to what you are saying, Abhay. Let's discuss spaces, but look at the returns and performance they showcase. But having said so, let's talk about consumption also, because from here, it's the festive season demand which will start being seen. And at the same time, the GST rate rationalization, a good boost which was required for the consumption space. What do you think is the impact of the GST cut and the rate rationalization which just got announced? And how do you see the sectors related performing because of it?
So overall, I would say, Mansi, very positive, and I think not only positive from the fact that it has been done and it will have that upside for the sector, but I think it also clearly shows to everyone the intent of the government that it is going to push forward reforms, rationalization wherever possible, and I'm hoping that this is not the last level of rationalization. I think there are enough opportunities for the government to go ahead and push more GST reforms, because there are a lot of tweaks that still need to be made. But whatever has been done, I think it's very positive. In the short term, there is confusion with the channels, because when we talk to the channels, they are expecting that the demand will get pushed out and lumped post September 22nd, when the new GST rates come up. There is still confusion about what happens to the old inventory that is at old prices, and will it need to be discounted. But the good thing is that between September 22nd and Diwali Day, which I think is October 20th or 21st, we are going to definitely see a bump up in demand, because the GST rate cuts across sectors have been very meaningful. So whether it is discretionary demand in form of automobiles or home improvement, home building products, or regular day items, which people consume, personal care products, food products. So I think it is definitely going to give a big fillip to the entire consumption market, put more money in the hands of the entire supply chain, distribution chain. So definitely very positive for the economy. Our analysis is that it should add anything from 40 to 50 basis points to the economic growth, which is quite sizable, if you look at it from that perspective.
Right. When you talk about consumption, the expectation is that it will be good for NBFCs, even small
Yes.
banks for that matter. Which are the areas one should now focus on keeping this consumption story in mind?
Yeah, Ankur, that's a very good question. I should have covered that. So I think on the bank perspective, if you look at it, and we have seen small banks, especially banks and microfinance companies, NBFCs, that lend to the lowest level of the society, the unsecured lending, which is only against cash income. That entire space has struggled over the last 18 months. It has been plagued by RBI restrictions on lending, plus also a lot of NPAs, low collection ratios, and we are seeing that reverse already. So I think these GST reforms that push consumption again give fillip to the income of the lowest level of the society, which has been facing hardships because of low income, low consumption. I think finally they will see money coming into their pockets because of the consumption uptake. And the lender, the small banks, especially the SFBs, which have high allocation to microfinance, unsecured lending, SME lending, I think they will be a big beneficiary, which has currently, Ankur, not being built into anybody's assumptions. Everybody is just looking at FMCG companies or branded consumer product companies, but people are not realizing the very positive impact it will have on the microfinance companies and unsecured lenders. So I think that is a space that we are expecting to do well over the next 12 months as the credit cycle reverses.
That's right. Abhay, I would want to deep dive a little more on the pharmaceutical space, as it is one of the sectors which is on your positive focus radar. And when we talk about pharma, it's not just a sector now. There are so many subsectors:
Yes.
the healthcare, diagnostic, laboratory, hospital, CDMO, like you explained also. But then at present, we see the sector has taken a little bit of a breather. Yes, it was playing the role of a defensive really well in the volatile market. But then this breather or a little bit of a downtrend is still a positive opportunity to enter the space?
Yeah, Mansi, I think if you break up the healthcare sector into pharmaceuticals, into healthcare, which is hospitals, diagnostics, pharmacy, and then the innovation-led pharmaceutical, which is the CDMO and specialty drugs and medicines. I think the domestic market, which is the domestic hospitals, domestic healthcare, domestic pharmacies, and diagnostic, this is a market that's only going to grow. It's just by the sheer demographics and higher per capita GDP, more insurance coverage. It has all the triggers, and I think that's one of the reasons that the sector has done well. And now it has probably got overvalued, so taking a breather, and investors are looking for other opportunities for growth. But this is, I think, an evergreen story for next 10 years at least, that we will see more and more hospitals, rooms coming up, the chains which are already there continuing to grow, easy access to capital for growth from banks. The only risk is valuation, so we have seen that in diagnostic companies also. The earnings have grown, prices have stagnated because investors got too excited and paid too much for them. So I think if the valuations are appropriate, I think the entire domestic healthcare space is something that will make money for investors, including health insurance companies, if I plug that also into that. So I think it's a very good play, will make money. Investors will have to be patient and judicious, not to overpay. On the exported pharmaceuticals, I think the generic pharma will continue to do well. The US FDA is very friendly right now. There are on and off tariff threats, but I don't think they will stick. But the interesting space, there are companies that are doing very interesting, innovation work, which the result of that, which will be visible in next 3 4 4 years.
All right, Abhay, thank you so much with those views, and definitely viewers will benefit from the same.